It gives me great pleasure to introduce Dakshesh Patel, founder and CEO of Zympay. Dakshesh will speak on how Fintech can be a catalyst for the mainstream economic inclusion of SMEs and how the various key stakeholders, be it big business, government and technology players, can support SMEs in their quest to be part of the broader global economy. Welcome, Dakshesh.
Hi, I'm Dakshesh Patel. I'm the founder and CEO of Zympay, a cross-border bill marketplace. We're looking to now expand that in Africa to take it to another level of digital banking.
Thank you, Dakshesh. So what will you be focusing on today?
So what are the key areas that we want to focus on? And it's areas that we've been spending the last year exploring, certainly in the South African context and the SADC market itself. So fintechs play a big role. And one of the key segments that we should look at is women entrepreneurs, because we've seen that 30% of SMEs, certainly in Africa, is driven successfully by women entrepreneurs. So there needs to be a segment within the banking sector to support that particular initiative itself. Efficient solutions, use of big data. So the challenge to the fintech community is to come up with new models that they can partner with either institutions or large corporates in delivering that service, enabling them, empowering them to be able to support this segment of the market, which hitherto they've not had the investment capacity to do. And so that's an important consideration. Payment technologies clearly are evolving, and with the advent of telcos stepping into the space of financial services as well, that convergence is going to happen, whether we like it or not. And so it's finding that solution. Government support is fundamental in relation to credit support, as well as guarantees, if you like, that allows banks and other institutions and corporates to participate in that ecosystem, if you like. So COVID is redefining our lives and our businesses in the future. New ecosystems will emerge, and we need to be agile to adapt to that change. And the virtual world is what we are experiencing and will continue. Major digital players like Amazon, Alibaba, etc., have taken huge advantage of that seismic shift in people behavior towards online services. Corporates have responded equally well in relation to suiting the lifestyle changes that people are taking. And these will have a fundamental impact on society and the way we operate. A key focus is climate change in the environment. And I think it will become increasingly important that businesses adapt their models to suit the environment and to suit the impact of climate change in how we actually respond to that particular challenge to the world. This will have a seismic impact on the SME sector as we know it. It is an important sector that is actually providing the fuel that drives the GDP in any economy. But SMEs will need to respond to the challenge of being more agile, being a lot more focused, and widening their product reach in relation to how they support the economy and the community they serve. But they can't do it alone. They need the support of government. They need the support of the banking industry, and they need the support of their suppliers and the supply chain. So agility comes from collective effort and from collective environments. Let's look at some of the stats just to illustrate that point. The US economy is fundamentally built on mom and pop shops. Over 99% of America's GDP arises from SME sector. When you look at World Bank stats, and the SME Forum has published that over 90% of businesses around the world, particularly in emerging markets, are essentially the SME. They represent nearly 50% of the employment statistic in a given country and contribute over 40% of the GDP. So it's a very, very significant segment of the market that we cannot ignore in relation to economic recovery. COVID is going to redefine how economic recovery and the pace of change takes place. And if you look at South Africa in particular, it is over 6 million formal and informal businesses, but only 14% of that are formal. And so it's a huge challenge, from a domestic perspective in terms of what we are seeing in this market. If you take Jack Ma, who's been leading a lot of the evolution and the change, if you like, his model is very simple. They've been in a universal banking model and agility and innovation that uses big data to provide lending services into the SME sector. So that statement is quite profound, and I will talk more about how big data and the change in innovation in banking can provide the fuel that can really restart the SME sector in any given economy. Let's look at some leading examples. We have M-Pesa that fundamentally changed the role of SME in the agency bank model. in Kenya and East Africa, if you like, and it's become a business case study in itself. When you look at some of the larger corporates like Alibaba itself, over 150,000 suppliers are on that model that gives them new access to new markets, and it fuels the SME sector in a much bigger way. Amazon, exactly, the same things happen there, where they've started by being a bookstore to now actually being the world's biggest marketplace, supporting SME through payment services, logistics excellence. And those are the two key variables that actually do drive SME growth in any given market. So when we look at SME, what are the key areas of focus for us? It's about access to finance. 50% of SMEs do not get access to formal finance, either because they're not formally registered or the banking industry has a different criteria in how they actually support that particular sector. At the lower levels, over 60% of the consumer base, has access to banking. And if you look at South Africa in particular, the spaza shops, 90% is cash. Why? They don't have access to affordable point of sale to be able to take digital and card transactions. So it's a big challenge in relation to that particular market. Supply chains do not support that model in the right and most efficient way, if you like. And it's an area that we need to consider. So corporate supply chain efficiency needs to come through in relation to the model of supporting that vertical integration. So logistics and the environment are big things that we need to consider in bringing more efficiency in how that market can be served from a supply perspective, but also the impact on the environment. And what I mean by that is that it's for large corporate suppliers to think through, is it brand or is it the environment that they need to try and focus on? And if they collaborate through logistics and sort of just-in-time delivery into that SME sector, then it serves the purpose of our response to climate change, but also bringing efficiency to the SME sector is really important. The use of big data. Historically, that market has been a cash economy. So they go to cash and carry, they'll pay for their bread suppliers, they'll pay for their beverage suppliers, etc. It's all in cash. So when we look at traditional models, then there isn't credit structures in place because that data doesn't exist. But trade data does exist in relation to the supply chain. So it's how we use that big data to support financing in more innovative ways in which to stimulate growth in the SME is pretty fundamental. And it's a big challenge that we need to address. The role of banks is pretty fundamental. In any ecosystem, unless the banking system can support that segment of the market, how do you fuel, and how do you generate growth in GDP? How do you create jobs? We know that in emerging markets, 7 out of 10 new jobs are created in the SME sector. So it's a fundamental area that we are actually not ignoring, but just underwhelmed in relation to our support that we've given. Red tape, how do we formalize that particular sector? In South Africa, I mentioned that there are a significant number of informal businesses. So part of it is education as well. So by example, you only pay tax in South Africa if you earn over 80,000 Rand. So not most spazas don't understand that because they don't focus on that. So the idea of staying in the informal sector is a myth. It needs financial education. It needs banking services that provide that sort of access. It needs professional firms like accounting firms, like law firms, etc., to set up a service that can give easier access, that empowers them, that enriches their ability to come into the formal sector. So the incentives have to be right. And the red tape that we need to cut is having a one-stop shop, using technology in how do you digitally register those particular markets itself. The consumer need is changing as well. We can see that 5 years from now, our prediction is that banking, as we know it today, will fundamentally shift. A lot more is going to be around social interaction, about the social environment and the needs in the customer lifestyle. And that's where we're seeing this huge trend of convergence between the telcos, the consumer, and banking services. And I think it's the collaboration of those three to find an effective way to support that community of consumers, particularly at the low end of the market, is pretty fundamental to provide the 3 C's that we talk about, is convenience, control, and cost. So bringing convenience means you've got to fuel your local store. You have the ability that they have wider product. They have the ability to finance more efficiently their supply chains, etc. So where does banking come into all of this? Innovation historically has been restricted to large corporates, and it's incredible how effective solutions banks come up with when it comes to large corporates. There's capital market solutions, efficiency on supply chain management, financing, right down to the consumer-facing payment terminals and services, digital services for online, etc. And there's been huge innovation in that particular space, but very little translates at the SME sector. And part of that is the reward philosophy that financial institutions have been used to. Where you can get business from one large corporate, you now need to have a multiple of 1,000 SMEs. So the ratio effect of that has a fundamental psychological impact on how much you invest and how much you're willing to do. 2, systems credit scoring are based on historical credit data. So when you're looking at the SME sector, particularly the sort of underbanked or the informal or those very small SMEs, if you like, then they don't have access to them because they don't qualify. So over 50% of applications that go in, and in some countries as high as 75%, fail to get approval. And therefore, you're stifling that growth. So the irony is that the impact of that SME that is not stimulated through growth has a direct impact on GDP and therefore consumer spending, and therefore it's a vicious circle in relation to how do you address that. The cost to serve is very high. So whilst we talked about giving point-of-sale services and the ability to take cards at the local stores, etc., the cost of that is too high, so it's not justified economically. Supply chains need to be a lot more agile in how they can support that particular segment, but it needs a financial solution, it needs a banking solution to support the financing of that supply chain. So banks fundamentally need to go, it's a paradigm shift that they've got to think through. It's re-looking at their business models, it's re-looking at how do you address the challenge in this particular segment of the market, if you like. So what's the future model? Corporates have a major role to play in relation to supply chains, and we're seeing that through technology, there's vertical integration in supply chains that's becoming a lot more prevalent. And I think the markets that adapt to that vertical supply chain means you're bringing efficiency from the supply right down to the SME, which means the consumer gets convenience of choice. And you're bringing a lot more localization into that sort of interaction between the consumer and the SME business themselves. Finance innovation, need to drive competitiveness, if you like. And the innovation is about how you use big data. How do you use artificial intelligence? How do you use more agile payment solutions to provide the right level of service and support and financing around that supply chain? So supply chain finance will become much more fundamental in relation to how you can drive behavioral change and access to the SME, if you like. So registering for the formal sector, if you like, becomes a lot easier if the SME can see financial value that they can gain from being part of that ecosystem, if you like. New income streams, so it's actually creating new pay points, so taking the M-Pesa model and saying how do you enable them, how do you empower them to become the center of consumer interaction in their local community. So it's all about taking banking back to the community, it's all about localization. And in the advent of COVID, which is going to change the way we work, the way we live, essentially, it becomes an essential element that we take banking services to the consumer through localization. And so, we see banking and corporates playing a big role in that particular segment of the market. And it's areas that we want to focus on, as a business, if you like. And I think leading by example is the only way we can make that seismic shift to the future of SME. Thank you.
Thank you, Dakshesh. Can you give us a couple of examples of how fintech has fundamentally changed society as we know it?
Sure. I mean, there's several that I can give you. The ones that really stand out for me and the ones that I look to in relation to how we should respond in different markets would be M-Pesa to begin with. It's the grandfather of how mobile money revolutionized providing access to banking services initially in Kenya, and has become the role model for a number of countries that have developed mobile money services, that have set that as a benchmark, if you like. The two that really stand out that have had a huge impact on the global market, if you like, is, if we take India, Paytm, and the seismic shift of becoming a payment bank and transaction banking services and access right down to the rural community has been fundamental and has become a leading player in relation to access to merchants, to SMEs, and consumers to a new way of paying for things. And that's been very, very significant. If we turn to China, you've got Alipay and you've got WeChat. But WeChat converged telco, they converged social lifestyle, and they converged banking services, what was previously a very difficult and federated domestic banking service, to fundamentally change that. And they've got over 1 billion customers in relation to providing financial services in that particular market. And I think we need to look at those three models in relation to what's the challenge for banking, for the SME sector, and how do we innovate for change relative to what's already been successfully delivered in the global market.
Thank you. My final question. What role does e-commerce play in today's world, and how is fintech enabling and driving this new revolution in retail?
I think it's a very significant question, very important question for us to consider. And I think we can't ignore e-commerce. If I start with South Africa, even just 2 years ago, before COVID set in, there was this huge concern around cybersecurity. And if you look globally now, online has become the norm in relation to our daily lives, and the convenience of it and the response of corporates as well as SMEs has been very significant. If you take Alibaba, as I explained in my discussion, by creating that global marketplace and providing logistics and payment solutions and access, easier access to those suppliers, they've fundamentally leveled the playing field between SMEs and corporates in supply chains and global supply chains, if you like, in the market. When we come closer to Africa, if you like, the African free trade area is going to start improving and create new opportunities, both for SMEs but also corporates that are looking to create non-geographic based supply services right down to the consumer. And the two key ingredients are going to be logistics and payments and banking services. And telcos have a part to play in the delivery of that channel into the market itself. And when we look at the little SME in the local community, if you like, their model may shift to becoming the click and collect. They become the digital channel through which people can go and order product if they don't have access to the internet, etc. And that local spaza shop then becomes that collection point where you can just conveniently go collect product that you order online. They become your place where you can pay because they've got that payment terminal. So fintech enables all of that, providing that technology platform that enables leveling playing field for the local SME to participate in the e-commerce logistics solution and payment solution. And it gives corporates a much wider access and agent points through which they can deliver their products and services into the market safely and conveniently at an affordable cost, and creates a whole new revenue stream for that SME market.